Hello, good afternoon. Good afternoon, Theo. Good afternoon, Jens. Good afternoon, everybody. And welcome to our traders Q3 roundtable this afternoon. Nice to see you here, gentlemen.
Thank you so much for having us.
Yes, it's a pleasure. So I remember last time we spoke, I think gold was trading significantly lower. Paul said be long gold, and then bam.
Yeah, which was a great call, as long as you got out of gold when it went above $2,000 and stuff. So
Yeah.
yeah, yeah, it's great to have you here. I think everybody's here in the room today for us. What we're going to talk about, which is our traders roundtable. We're coming towards it's the final couple of days of Q3. We're going to have the end of the week, end of the month, end of the quarter, and then we're into the final few months of the year. So this is a fantastic opportunity for us to basically in a virtual way, have a little roundtable and have a chat about, a little bit about what we've experienced and like this year, but also just share our own views and interests on some instruments and some charts that might be of interest to us for the remainder of the year 2023, because I suspect it will likely be as eventful as the first 9-10 months of the year have been. So
Yes.
that's great. Any comments you guys like to pass before we kick off?
Jens?
No, I'm happy.
Same here, same here.
Good, excellent. All right.
It's
well,
gonna be, although
do...
it's gonna be a challenging the last quarter, obviously, because we kind of saw some monetary policies start stabilized, tightening, and yeah, with the BRICS now, the US dollar, it's a bit of uncertain. But yeah, we will see how things will develop.
Exactly. We'll be a little bit uncertain, and that's the joy of trading, isn't it? That's the joy of trading. So what I'm going to do is I'm going to bring up my screen, gentlemen, if that's all right, and should be able to do that. Hopefully, bring that up. Boss, there we go. Let's just move this out of the way. I'm hoping that everybody who's here in the room so far, I'm hoping everybody can see us. Okay, the delightful view of myself, Theo, and Jens, and can also see the slides. Okay, so as I said, here we are, Traders Q3 Roundtable, preparing for that final quarter of 2023. Just as always, just a couple of little logistic messages just to begin, just to set the tone for our days. Remember, here we are. We're Admirals, a Forex and CFD broker with global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and giving the opportunity to engage with markets using both the MT4 and MT5 platform. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. Okay, so what we want to talk about today, as I said, just setting up, is that as part of our Q3 roundtable, we're going to have just a little bit of personal insight from our traders joining us here today on what they have seen and what they've learned so far in this year, and talk about how that ability to reflect on what you've learned, what you've seen, okay, is a really crucial, valuable tool for traders. And then most importantly, what we're going to be having a look at, each of us is going to have 3 instruments just that we'll be looking at, okay, that we're interested in for the next, for the remainder of 2023, these next 3 months or so. If there is time at the end, we'll take a look at the live markets. But, that is, I'd say that's more of a hope than a promise, because invariably what happens on these sessions is once you get a few traders sat around looking at charts, having a chat, well, then the conversation just goes on and on and on. For those who don't know me, joining us here for the first time, my name's Paul, traded for many years, traded for funds, traded for clients. Primarily, I focus on FX indices and commodities, and my choices reflect that. And I tend to be a trend trader for longer term and a reversal trader for my shorter term intraday trading and scalping. So that's me. Theo, I think I've got a slide for you. Okay, I don't know if you want to take a moment just to sort of explain who you are to the people who are joining us who won't have had the pleasure of your company in the past, Theo.
Okay, absolutely. Thank you so much for that. So for those who see me for first time, my name is Theo. I have more than 10 years experience in investing and mainly trading. I'm a certified market technician, and my highest education is a master's in physics, which helps a little bit with the thinking process, I would say, in trading. When it comes to trading, I usually approach a swing trading on the 4-hour time frames. I prefer that. An intraday trader, mainly on indices around the opening of each major session, like the London and the US session. And here at Admirals, I dedicate all my time and my energy and my effort here and the passion. And I'm an investing and trading educator and analyst. And I used to there and then do some coaching as well. But pretty much, yeah, the most of the time it's exclusively for educating and do market analysis. Yeah, that's all.
Excellent. Thank you, Theo. Unfortunately, I don't have a slide for Jens, but I think the whole world knows who Jens is. That's it. But perhaps Jens, maybe you can just say a couple of moments, just to introduce yourself to the 1 or 2 people in the 7.5 billion people in the globe who don't know who Jens Klatt is.
Yeah, my name is Jens Klatt. I'm also trading the markets for 20 years now, I think. I, in fact, learned trading as a professional. I didn't start out as a retail trader, but I worked for a stockbroker here in Germany. After I finished my traineeship with a bank, that was in the early 2000s, and then I took it from there. In fact, so I learned trading from scratch there, how to make markets in stocks, especially. After that, I worked for an quite big FX broker, built their education and research arm, and then, well, yeah, I went out on my own after building a reputation and letting the whole world know about me, at least in Germany, and. Yeah, so that's in fact my career path. So trading the markets, doing research, educating people, exchanging ideas with people. That's in fact, yeah, that's in fact it about me.
Excellent. Thanks, Ian. So,
Cool.
I said for those people who are joining us here today, it's probably fair to say we all come from different backgrounds. We all engage in markets in different ways. Okay, we all have preferences. Okay, that differ, and that actually makes for more of an interesting conversation because we could look at the same chart and have completely different views, and that's absolutely fine because ultimately that's what makes a market. Okay, by everybody having different views and acting upon them. But right, thank you for that, gentlemen. Thank you for the little introduction. So, yeah, so as I've kind of already said, we're approaching the end of calendar Q3, and it provides an opportunity for myself, but also for Theo, Jens, and also for those of you joining us here today, to do 2 things. Firstly, to reflect upon what you've learned so far this year, because sometimes when you're engaged in the activity of trading and investing in markets on a day-to-day basis, sometimes maybe you kind of lose the big picture. Okay, you can't see the wood for the trees, and also it's an opportunity to sort of analyze possible scenarios and opportunities that may present themselves in this final few months of the year. So today we're joined by Jens and Theo to answer those 2 points raised above. And if you're joining us here, questions are welcome, or you're very welcome to pass your thoughts. We always really enjoy the interaction. So if you've got any comments or thoughts or questions, then please put them in the chat box there that you have access to. We'll look forward to sort of answering them as we flow through this particular session. So let's crack on then, shall we? Let's kick off. And fantastic. So I just put a slide in here before we go to our own instruments, as I said, just to take a moment to reflect upon 2023 just in terms of what we've seen happen. I would say it's been a really rather eventful year. Okay, after what has been a good few eventful years, and also think about what if there's anything personally that you may have learned. Okay, whether it be on the good side or whether it be on the challenging side. So Theo made a little bit of a comment about earlier, but when I look back on this year, okay, in 2023, the kind of themes that I have been seeing and the themes that I've been working with have been one, that we have seen, rises in global interest rates, okay, across all of those major economies that we would probably look to be actively trading in. But now we're starting to see a pause in that, okay? Certainly over the last week, we have seen a shift, okay, from those rate hikes to pauses. And I suppose one of the questions which might come out in our conversation is, is that really a pause? Or are we done, okay, in terms of rate hikes? And could it possibly be that actually the next move is down rather than up? All right, so we'll touch upon that as we go through. All of that has been also helped and driven by, we have seen, certainly in terms of US Treasuries yields, they are reaching highs that have not been seen for a very long time. Now, I appreciate that there's probably lots of the people joining us here may not really either understand or actively engage with trading or investing in US Treasuries, but the impact it does have, and I think one of the charts Theo will talk about, is the impact upon the US dollar, okay, and we will all have a little look at how that has played out. And not only that, but then the impact that has had upon the other major and minor currencies that are trading against the US dollar. And there have been some really interesting charts and sort of that we will look at perhaps as we go through our session. Remember, we seem to have forgotten that, back in March, we were having collapses of banks in terms of globals like Credit Suisse, but also the local banks, okay, certainly in the US, things like Silicon Valley Bank and one or two of the other kind of little local regional banks. And then we've also had, moves in NVIDIA, driven, I would suggest by their commentary about their investment and their moves into AI, and that basically having a knock-on impact into basically any tech stock that just sort of used the words that it was involved with the AI, that kind of being fueled by that, and the question being that whether that will continue or whether that has sort of run its particular course, and tech stocks with that in particular. So there's kind of a couple of reflections on the themes that I have seen. Gentlemen, Theo or Jens, would you have anything there to add to that, or anything that you have personally reflected upon in terms of your own trading journey for 2023 so far?
I personally think that the interest rates, it shows us, it confirms actually that the banks pretty much, they either work together or the one follows the other, their monetary policy, so they can continue their transactions and their relationships at the end of the day, because it's not on the benefit of any major bank, for example, to go against another major economy, especially in this crucial financial overwhelm that's going around. So in terms of interest rates, I think we're gonna keep seeing that kind of pause until they see inflation rate changes the numbers, maybe the CPI, but who knows? I mean, now we have to just sit tight and just speculate on what we see happening. It's so much uncertain. So yeah, that's pretty much that's what I see.
Come on, Jens.
Yeah, what I think is interesting, I'm not really sure where I came across this news, but I think somewhere the last days, I think the CEO from JP Morgan, Jamie Dimon, I think said something that he could imagine the Fed to hike rates up to 7% or something, if I'm not mistaken. So that came kind of a surprise, to be honest, because as we've seen, the Fed hiked rates already well above the current inflation rate, and I think it was in I'm not sure, but 2021 or 2022, there was a very good interview with Stanley Druckenmiller, the hedge fund market wizard, let's call him, who said that in the past, when inflation went above 5%, the Fed had to hike rates above the inflation rate to bring it back to the target rate of 2%. What we currently seeing, in fact, so in fact we are at 5.25 to 550, if I'm not mistaken, and inflation is around 3.5% after oil ran a little higher up to new yearly highs, and so in fact we are there already. So I don't really see any need for further rate hikes, especially after the turbulences in March with the banks going down. But then on the other hand, I'm not really sure. I would probably say let's see what the winter brings. I mean, we here in Germany, well, we are happy. We don't care about inflation. We just want to see the lights go on and out. That's probably electricity. That's a big topic over here. And so let's. I mean, if inflation keeps on rising, I wouldn't be surprised to see probably. And that was already something the Fed, but also the ECB said, right? To keep rates higher for longer. So I think that came as kind of a surprise. But then on the other hand, at least when I look at equities, I see most of this already priced in to some extent already. So because this is a speculation which started, I think, with the June Fed meeting, if I'm not mistaken. That there was kind of hints to in this direction, which came as a surprise because after everything we've seen through March, especially, you would have expected the Fed probably to say, well, guys, probably we can't be too restrictive here because we are killing our banking sector. But well, right now it seems as if the information they have justifies to keep rates higher for longer and don't be too nervous about any further turbulences. So yeah, that's in fact my view on the market. So to one extent, I'm surprised to see hikes in the region we've seen them, and that the Fed will keep rates at the levels. That's certainly surprising, but I'm even more surprised by the fact that especially tech stocks performed that extraordinarily well in such an environment. So that's certainly something which I learned in terms of probably also managing my expectations then for equities in general.
Super. No, you're absolutely right in that we are now seeing a lot of those central bankers hinting at almost like a tabletop model, namely that we have reached around about our peaks, but they are looking to hopefully hold those interest rates for longer, higher for longer. That's what we're seeing, from the messages from those central bankers. One of the pieces that I picked up on myself was that there's normally a lag between the raise of an interest rate and that having an impact in the let's say the kind of Main Street economy. That period can be anywhere between 18 to 24 months. And so when we held here in the UK, when we held interest rates last week, I think it was Deutsche Bank analysts came out and said that, their view was that we had only seen 40% of the impact of the rate hikes we had seen so far. So there is still a good bit of a challenge to basically to find its way into the economy. And invariably that will have an impact in terms of the state of not only just the UK economy, but I suspect it's going to be reflected across most of those major global economies. Hence why, we will see, I think the data over these next few months will start to give us an idea of, do they have to rate hike or will that pause turn into a longer pause over the next 3 to 6 months, and of course markets will react to those central banks commentary. Okay, that's as the way it is, and invariably we will see that reflected in the prices of particular instruments that we are going to look at the moment. So before we move on to our own choices, is there any final comments on that in terms of your reflections for the year? Anything you particularly like to get off your chest that has been keeping you awake at night, gentlemen, over the last few months and stuff before we look at our own choices?
I'm totally fine.
All right,
Me too.
Good. Good. All right. So what we've got here, ladies and gentlemen, just before I just bring up mine. As I said, if you've got questions or comments or thoughts, you can pretty much put that in the chat box. We're very happy to take that on board and fill them, talk through them as we flow. William says, good afternoon, everyone. Good afternoon to William. I remember that gold call too, but I followed the advice from Theo. Fair enough. Fair play to you, William. All right. Great to have you still here. So what I'm going to have is I'm going to put up my three charts first, okay? And then I think what we'll do, I think then I've got Theo and Jens, and I think it's probably just easier to sort of talk through our individual choices. So I'm hoping that you can still see my first choice, which is kind of it's an interesting one. So this is the DAX, and this is a weekly chart of the DAX. So as someone based in the UK, I'm making a comment here on the sort of, let's say, the main European index, but I'll talk about why I'm intrigued and why I'm interested and why I'm going to be interested in it for the next few months of this year. Hopefully I can annotate and draw the drawing tools up here. So I said, this is the DAX weekly chart. We were in a fabulous downtrend, okay, if you were short last year. But really, this year has been so far, from the end of last year into the start of this year, we were in just in an uptrend that was grinding higher, okay, grinding higher there. And we had been seeing the kind of, the 20 period moving average here, my blue, acting as a significant support. And, just price happy to just, as I say, grind north, grind its way to higher highs. But what's kind of started to get me interested in is here. This was a sort of over the summer, end of July, and seen in one or two other indices. This candle here, having pushed to these new highs, these new highs for the year, for forever, etc. What we printed on the weekly chart is a bearish engulfing candle, and it is also a bearish key reversal candle, which is a candle I particularly keep an eye out and look to operate with, because it basically price pushed to a new high, but it rolled over and closed beneath the low of the previous candle.
I think it was an all-time high, Paul, right? Was new all-time highs in the DAX, yeah.
Yeah, it was absolutely all-time highs there, okay? And it pushed to all-time highs, but then prints a huge bearish candle, okay? So just there's a saying in England, one swallow doesn't make a summer, but and one candle doesn't necessarily mean the exact top of a market. But what I'm intrigued and leading me into is that once price had got beneath this blue 20 period moving average, it flips from being support to now being resistance. And hopefully you can see there that actually, even though price comes back up to it, it can't get above it. It can't get back above it. It can't hold above it. It's turned from support to resistance, and the 20 period in itself has started to flatten out and started to roll over.
For 1.5 months. That's
exactly.
a significant effort to try and overcome the resistance.
Absolutely. Absolutely. That a lot of that was over that summer period where we expect a bit of a lull. But what I'd have been expecting is, if there had been real strength in that, I'd have been expecting, a break above it and a real attempt to get back to those previous highs. But we've not seen that at all. And quite the opposite, we've actually started to sort of roll over. Last week was a significant bearish week. This week we have kind of broken the sort of the recent lows. And, of course, this is a weekly candle. We've still got a couple of days to go. So I'm going to be intrigued to see, how does this finish? How does this week finish, for the month, for the quarter? My view is that, if this closes here, beneath that weekly 50, which, we've not really been beneath the weekly 50 here since back in October of last year, really, in terms of weekly closes. I'm going to be intrigued to see, well, if that does close, it would not surprise me because we know price never moves in a straight line. There's always a bit of a zigzag. It wouldn't surprise me if basically price came down and then basically pulled back up again. And then I'd be looking to see as well, actually, this could be into a period where both the 20 and the 50 and price action are here. And if that rejects, well, then basically, I look for it to effectively, just move this over here, to reject and then move all the way down to sort of 15,000. That would be the scenario that I look at on the DAX at the moment. That's why it's of interest to me, because of course, if you look at the other kind of European indices, okay, you will see that they they take their lead from the DAX. Okay, Europe takes its lead from the DAX, and if the DAX is going to lead us lower, well, then invariably, that's invariably something I want to be aware of to see how could I trade in that direction should that scenario play out. So, any thoughts on that, boys? Any do you disagree, Jens? You might completely disagree with me and say that Jens is going to all-time highs. That's absolutely fine, but it's a case of I'd be interested to know what, if any, commentary or thoughts you might have yourself.
I don't think we are about to see new all-time highs. In fact, there's nothing to add in terms of your view. So I certainly, as a German trader, certainly have my eyes on the DAX, and I was really surprised to see this or was I really surprised, to be honest? I mean, not that the DAX is mirroring, let's say, the German political overall situation or the economic outlook, but I was surprised, in fact, to see the DAX perform up to new all-time highs, despite the fact that the ECB was surprisingly hawkish. So I didn't see the ECB to hike rates the way she did. Is it correct? Is it did?
Christine Lagarde, yeah, she did. Christine Lagarde, yeah, she's the head of the ECB.
No, I mean the ECB. So is the ECB a she? That's the question I'm asking.
That is a bigger conversation outside the remit of this particular one.
Okay,
it's the ECB.
Okay, yeah. The thing is that I'm kind of surprised to see that aggressive such a aggressive rate hike cycle due to the overall inhomogeneous situation we find in the Eurozone in general from a yield perspective. So especially looking at the southern periphery, looking at Italy, it's probably especially Italy in the current environment. And so that being said, I was surprised to see new all-time highs, but now I'm not surprised at all, especially after the break lower. In fact, I could really imagine in the upcoming days to see even a further weakness down to 15,000, probably even below that level. I think this is also kind of a projected target. If you use this resistance on the upside and the support, and you just duplicate the range, I think you get somewhere around 15,000, something like that. I think probably slightly below that. That's probably a projected target on the downside from my end.
I'd agree with you. I'd agree with you there and stuff. So good. So we are in agreement. Okay, it's topped, it's rolling over, and there's a good chance that could continue forward. Okay, excellent. So that's my view on DAX. Next up is here we have this is the pound against the Swiss franc. So
interesting that one.
I trade sterling.
To hear your thoughts here.
I'm primarily a sterling trader, okay, but but this is an interesting chart for me because, as I said, this is the weekly chart, and here we are. After we had this was basically kamikaze sort of economics of the new Prime Minister Liz Truss, who I used to work with many years ago, and such, and her Chancellor. They're no longer, and invariably, basically, there was a bit of a collapse in sterling, but it rallied back strongly. But what we have seen in that last year, and hopefully you can see that yourself, is that we have for most of that time been in a range between around about 115 on the north side, but we've had this significantly strong level of support, okay, at 111, and that hopefully you can just see how particularly clear that has been. And now what I see is that now is basically that is starting to coil up. If you're looking at classical technical analysis, you'd be saying that looking at that as it's a descending triangle, and you would probably be expecting it to basically for price to break to the south side. But so far, these last couple of months, whenever it's got beneath 111, it has basically been buoyed up, it's been supported, and whether that's being supported by actions by the SNB, I don't know. There are other people who could make, let's say, a deeper conversation about the fundamentals of it. But as a trader, I'm just trading what I see. Okay, so for me, that is getting to a point where it's going to have to make a decision. It's going to have to make a decision either to break it or pop back up. And if it does, well, then it heads back to 115. So, as I said, I'm going to be interested to see how that is tightening up, how that plays out over the next few weeks into the quarter. What do you think, gentlemen?
Absolutely, that looks very, and from a technical perspective, it looks a really good chart pattern, because as you see, many people, they're going to get confused that this is a descending triangle, and yes, it has bearish implications, of course, but on the other hand, this descending triangle appear within a tiny, I will say, sideways move, kind of consolidation, and we see that the price moves all the way to the apex of the triangle, and it's like it takes away the greatest qualification of this descending triangle can lead price to break below. So I totally agree with you. We can expect it to see some bullishness.
I'd also add so from a technical perspective, looks really interesting. But especially in a currency pair which is including the Swiss franc, and knowing based on history how the SNB intervenes aggressively against the euro, in fact against I would say every currency. Even if we break lower, I don't really see necessarily a sustainable move lower, so a follow through, but I could really imagine like an aggressive flush lower, and then not immediate bounce, but a very aggressive bounce, which probably is another trade. So it's like if you're saying I'm trading alongside and I'm willing to keep the trade for, let's say, I don't know, weeks or something, then I would say, well, even if you see a flush, I wouldn't be surprised to see, or it would be kind of a like momentum trade probably, but in fact very short-term trade, I would say, and I'd be very aggressive with my stop to not get caught on the wrong side with the SNB absorbing, let's say, any bigger volume which comes in on the downside there.
Absolutely. All right. I agree with that. Good comments, guys. Good comments. All right. And my final chart here is this is the euro against the Canadian dollar, and it's already, as is the case, it's in the time since yesterday when I was putting the chart together, it's already dropped 100 points, etc. So it's already kind of running away with me. But reason I'm interested in euro Canadian dollars, hopefully you can see, this is the monthly chart. Okay, so we've been in a pretty strong downtrend. It got finished there by a very nice, morning star formation. We rallied our way back up to here where the 200 and the 50 is. And really, if we look at that for this year, it has struggled to get really above it. The kind of the one time we get a real strong close above the 50, the next month we are sold, and we're sold back right down beneath the 50 and the 200. And a pattern I'm interested in was here is that, namely, we had I would call this, that's a bearish rejection candle, a bearish pin bar, followed by another inside bar. Okay, that whilst has a bullish close because of the wick and because of its proximity to the 50 peer moving average, my view would be that we are more likely to get a drawdown to the downside. And as you can see, this month that has already taken off and that has accelerated, and that has been in itself a great 4-hour trend. The reason I'm interested in this now is because, as I said, it's already dropped about another 100 pips this last 24 hours. But I personally, over the next few weeks, months, I could see us dropping down here to where the 20 period moving average has basically started to go sideways. We've got the 140, okay, big round number, and I could see that acting as a magnet, and so we see price drifting its way down there over the next 6 weeks or so. And then once it's there, it has to make a decision. Does it break through and continue right down to these lows of 2022, or does it reject and come back to the 50, which price is kind of like pivoting around? So I think the initial move is a draw, as in it drawn down to like that kind of 140 region, and then I'll be intrigued to see whether it continues or whether that has. And a lot of that continue would be a reflection of euro weakness and Canadian dollar strength, which has re-emerged in the last month or so, as we have seen basically oil price rises as well. So there you go. That's my thoughts on EuroCAD, gentlemen. Any insight or any considerations yourself?
Honestly speaking, the euro this month is suspective if the fundamentals, if the outcome of the fundamentals of the CPI confirm all these forecasts about the drawing number, which again, reduced number in CPI, it's great for consumers, but it hurts the currency. We can see a lot of weakness in the euro coming across the markets, and that's going to definitely fuel, and I totally agree with you that it's going to fuel everything to the downside and just dump euro aggressively, I can say.
My view on the euro is also not very positive. So I'm not sure if I would go for Euro Cat. I'm more in the major space when it comes to the euro right now, in the FX space in general. But I could imagine really Euro USD to probably see another test of parity within the next, let's say, 12 months. Probably that's even a fast trend lower. We will see there. And my main point I would make in terms of the euro is, in fact, the German economy is the backbone of the euro. And so with the current government breaking this backbone and killing the German economy with a ridiculous path they follow, I think we will certainly see further weakness. Even though I have to say, if we all agree, then most of the time it will come a little different, let's say. And in fact, right now, looking into the end of the quarter, I think there's probably, or I don't want to sell the euro on lows we make now into the quarterly close, but we could imagine kind of a bounce and then rolling over the course of the next months, probably 3 to 6 months, then into the start of 2024, that we are significantly heading lower there.
Okay, cool. All right, thank you for that, gentlemen. All right, so that is my that's my three choices to look at. The what we've just covered there, and now I think we can switch across to I think Jens. I think I've put your slides in next. So if I boom, hopefully they should be able to. Here we go. There we go. Jens' choices. Now, Theo, I don't know if you want to can we give control to Jens so he can just basically draw on his particular chart if he wishes. Is that possible?
Yes. There is.
I can draw my charts.
There is an icon, as you see the screen on the left above the mic where it says mute, and it's the annotated button there. If you pressed it, you will be able to draw.
Wait a second.
Because you are also co-host.
The wonders of technology. Can you draw on there, Jens? Are you able to?
Above the mute, there is a circle.
Oh, let me just see. Can I just
press that one?
Hello?
Yes, there you
Yes, you can see that? Okay, very beautiful.
Yes.
I don't really know if I need to draw, to be honest. So my first choice is in fact NVIDIA. Just before we started this event here, I was in a German Admirals event, and we were talking about investment opportunities in the current hot sector, AI, artificial intelligence, and so I certainly made NVIDIA a topic there, even though I have to say, or no, let me start with a little story. So I was looking at NVIDIA for quite a while now, because I also remember that was in, I think, 2021, if I'm not mistaken. I was holding a webinar, and we were covering the semiconductor space, and I was covering NVIDIA, my outlook there. And I said, in fact, the headline, I have to look it up, but I think, is NVIDIA the first $1 trillion USD company in the semiconductor space? I think that was close to the topic. And in fact, we now have seen a market cap of and crossing a market cap of 1 trillion after these crushing earnings. And so the question I was asking, based then, especially on this massive downtrend we've seen here over the course of 2022, was, well, do I really want to buy in here? So right now it looks somehow a little, let's say, messy, or it wasn't really like I don't want to sell. I'm sorry, I don't want to buy the drop here due to all the developments we've seen, and then also knowing that Nvidia is very focused. While on the AI part, certainly also on the gaming sector, we had some, or we still have some headwinds there in the gaming sector, and so then things started to get interesting because then we saw this AI hype starting at the beginning of this year, and Nvidia started to catch a bit already. I've seen some buying coming in around October, November last year. That was around here, and then we crossed back. This line is the 50 simple moving average, just as a guideline where we trend. And we were not just trading back above that level, but also making it back above the 200 SMA, and then also crossing here with the 50 SMA back above the back above the 200 SMA. And then we gained some traction. And I started really to think, okay, well, obviously the bottom is in, or at least it seems to me as if the selling is through. And we both regained control. And it was like, okay, now I'm waiting for a pull in. And I was starting to work with classic indicators. So like example, year to date anchored moving volume weighted average prices. And I said, well, that was especially true at the February earnings. It was that were around here in this area. I was like, okay, well, now look at where we come from and where we are going. We were ahead from the lows in 2022. We were something like 70% or something. Of trading above these lows here. I said, okay, if we get to see a pull in and then buyers regain control, then I want to be a buyer. We see crushing earnings, gapping higher, never closing the gap, consolidating and breaking on the upside. And like, that's a little pity because I didn't buy here. So then we have the next run higher into the Q1 earnings that was here. And I was like, okay, well, we've came from 100, 110 or something, trading above to something like close to 300, nearly tripling. And I say, well, looks like a little overbought. Probably now we get to see a pull in down to something like 240s or something. Then I want to be a buyer, even though then with reduced position size, but still, that's seems to be interesting. What we get is crushing earnings with a massive gap on the upside. New all-time highs. So that was new all-time highs, and also revenue guidance, which was 60% above Wall Street estimates. Still no buy, and then we just went too high. While I can imagine that the market, or in this case Nvidia, will probably see a pull in to some extent. And has seen already coming down to somewhere around 400, but still holding about that level. I have to say, I don't want to buy here because I think now it's time to settle probably. So I'm not saying that we probably have interesting trading opportunities in Nvidia, probably trading back above or towards 500, but I don't really see within the time span of the next 6 to 12 months further room on the upside for new all-time highs, because I think given what we've seen so far, I think much of the positive outlook or revenue growth is already priced in, especially in the GPU sector. And probably there's also, well, it's time to digest probably. So, and I think that over the course of the next 12 months, even if I'm interested in position myself in the AI sector, I don't necessarily think that Nvidia is the most attractive play here, risk reward wise. But I think, in fact, and this is another chart I prepared, if I want to play the AI sector, and in addition to that, also the developments in the electric vehicle space and so on and so forth, I think that Tesla is probably a better stock to focus on instead of Nvidia. So, what are your thoughts?
Yeah, cool. I like that.
Yeah.
Although I would have using the average dollar cost strategy to invest, I wouldn't trade at this particular level using leverage, but one of the investing accounts we have here at Admirals, I will definitely go to try and buy a little bit on every dip, because I'm not going to be sitting around waiting for the bottom. So just to buy a little bit on every dip, I would. It's something I keep an eye on that.
Yeah, all I'd add is that's been a great trend, right? From from $100 there in a year to just tickling the soft underbelly of $500. It had technicals, it had fundamental, it had sentiment. You wouldn't want to fight that. You want to ride that. And I'm the same. I have that line in the sand around about $400. Is it going to bounce off that? In which case, could it put the right shoulder over Head and Shoulders? Or if that $400 cracks, I think that's an indication of lower moves across the tech sector anyway. So there you go. That'd be my view.
I think we have a good chance to bounce here at least, and probably form this right shoulder with I think SMH. I came down quite significantly over the course of the last week. I'm not sure if it was especially weak last week, and then probably we are a little extended there. So probably seeing the bounce from there. And then, let's just see. I mean, on the other hand, I have to say we are still holding strongly given the current developments in the yield sector and also in the tech sector in general. I mean, and also adding there, I mean, this is a $1 trillion USD company, and it moves like a growth stock, which is just IPO'd and then it goes vertical, which I think also points to the massive opportunities the AIS sector probably has, and in addition to that, why it's it makes definitely sense to monitor this and keep a close eye on that, or at least have it on the watch list for further developments, and search for probably stocks which are which have not seen such strong moves as of now, and probably are more interesting from a risk reward perspective.
Oh, excellent. Should we move on to your next one, Jens?
Yeah, please.
Is it?
And there we go. So, yes. So I think I'm not sure if the chart speaks for itself, but I'm a long-term Tesla investor, so that's probably something to note here. So I will certainly paint a bullish picture, but there's more and more things lining up right now. And in fact, the strategy which was just described from Theo, I used it here in this massive down move we've seen on the leg lower. I think that was mainly driven, especially, to be honest, I was very surprised. Around 12 months ago, we were relatively strong in Tesla, given the overall market and how beaten up it was. And Tesla held extremely well. And I think this is an area around 300, 320 around. So I think this is also a key level on the upside. If we break that, I think we have a solid chance in quite a short period of time, probably to go for a retest of the all-time highs. It depends certainly a little on what the overall market will deliver. But here, this drop lower, I think that was mainly driven from emotions and also from the fact that Elon Musk bought Twitter. If you follow these developments there, and the thing is, somebody might say, well, now the stock dropped because people think he can't focus on his work at Tesla any further. No, because most of his money is invested in Tesla stock, so he has skin in the game, let's say. And if he is looking for cash, even if he is the richest person in the world, he has to sell stock to get the money to buy another company, and that's exactly what he did here. I think that started already here, in fact, so that was already here, this leg lower, and then there were also some developments from an overall market perspective. So we cracked, or we bounced heavily against 300, 320, dropped lower, and then once we broke here the yearly highs around, we saw really sell out into the yearly close down to, I think, was close to 100 also, I think, if I'm not mistaken. And then we bottomed around that. There were also price cuts. There was also something which is very interesting, because people, and that's at least my take on this. So people say, hey, Tesla is cutting prices for their EVs because the demand is slowing. And I say, well, I don't look at it from this perspective. And also when looking at, for example, deliveries, and we'll get new numbers now over the next weekend, for example, you can see that there's still an enormous growth in terms of the overall demand for EVs in general. And Tesla, as the leader in this space, sees an enormous run. And in addition to that, there's also the high profit margin. So they can afford to cut rates and put pressure on their competitors, potentially losing some of their potential gains. But on the other hand, and this is the next step, they're mainly focused, in fact, on the full self-driving developments and also the AI sector to some extent. That was, by the way, one of the reasons. Most recently, we saw this push higher here. Some of you have seen that. That was earlier this month. There was an analyst from Morgan Stanley, Adam Jones, who just upped his price target for Tesla and from 250 to 400. Based on the developments we've seen here around Dojo. So this is a supercomputer which is working with all the data Tesla collects to build their FSD in this case, so full self-driving. And so this is exactly the point. So now if you cut prices and you see stronger demand from people saying, hey, I want to drive a Tesla, and there's more Teslas sold to the broader public, you get more data you can work with to increase your overall reach in terms of the FSD space or AI space, respectively full self-driving and autonomous driving. And that being said, I think is something to keep a close eye on, because once we reach the point here where this is a product you can sell to a broader audience and you get to see developments which are similar to what we've seen now in terms of the superchargers, which are used in the US, for example, from the main competitors like Ford, General Motors, and you now see potentially some license developments, let's call them, in terms of the FSD, full self-driving. I think that Tesla has massive potential on the upside, especially if we break above 320. And that being said, would be risk-reward wise my play, in fact, to some extent in the AI space. And I'd be more interested in being long Tesla than I'd be being long NVIDIA right now, even though NVIDIA is certainly a leader in the SMH, or respectively semiconductor space. Yeah, that's why I brought Tesla with me. And as you can see, I still have a very bullish outlook. I'd certainly want to see break above 320. But again, once we break above that level, I think new all-time highs are just a matter of time, and even a price as well above that. So what do you think?
Cool. Yeah, that's very in-depth. Clearly Tesla is your baby. Jens there, okay? Clearly is an understand of it.
I also agree with you. Nothing, yeah. And I like that approach, absolutely.
The only quick thing I'd say is I agree with the support and trend line. I wondered whether if price would come down there before it rallied up there.
Yeah.
That would be the only thing I'd be looking at personally. Super. I appreciate time is, as always, it's always the way. Once you get traders talking about charts, okay, we time runs away, and so if you're right, what we'd like to do is move on to your next and final one, Jens. So Bitcoin,
and we make it quick and dirty with Bitcoin. So
okay.
Keep a close eye, I would say, at 28 here. So can you read this? I hope so. It's an 8.
Yep.
Some of you probably have seen the developments around not Grayscale, but the Bitcoin ETF, especially. And there was BlackRock saying, "Hey, we want to launch a Bitcoin ETF." That's of interest for Bitcoin traders or Bitcoin in general, because they wanna partner with Coinbase to buy Bitcoin to give their, let's say, give their offering in terms of Bitcoin ETF a physical or a real touch. Let's say it's not just a product you can see on paper, but there's also a physical underlying here within this ETF. That's why we saw a push higher in Bitcoin. And there's also others like Fidelity, like ARK Invest, and so on and so forth, also who want to join this potential development. The SEC has to give a final go. And there was then a development. The SEC is running out of points or arguments then to say why the SEC does not allow a Bitcoin ETF. And so we pushed up to 28,000. And the interesting thing about 28,000 is not just that it's a high here from I call it the grayscale high. So GBTC grayscale is a crypto wealth manager, probably that's a good way to put it. And they also want to launch a Bitcoin ETF. The SEC said no. And now what's the word for this? I'm missing the English word for Gericht. So it's where laws are made. So what's this?
So like regulatory.
Yeah, regulatory.
Yeah.
But also, I'm sorry. It's not really regulatory. It's like what's the word for this? Gericht. It's like, let me just see. Court. It's a court. It's a court. I was looking for. Yes, a court. So a court just said, well, the SEC has to overlook this once again, and make sure that they bring up a better reason than they just brought up. Let's say that was around 28,000. And what's very interesting is that if you have an anchored volume weighted average price at the all-time highs in Bitcoin, around 61,000 or something, 66, I'm not really sure, 67. Which was marked in 2021, you will see that the average price which was paid from market participants is around 28,000. So you could easily argue that they say, hey, once we break above and hold above 28,000, bulls are back in control to some extent. And that could be of interest. I could imagine that that's probably then the case for at least another push up to probably even well above 30,000, 32,000 USD per Bitcoin. Yeah, so these are my thoughts on Bitcoin. What are yours? So would you go along with me?
My view is it's been a pretty dull year for Bitcoin, and my own view is its price has been pivoting around 26,000. That region has been above it, it's been beneath it. So 26 to 28,000. Yeah, I could live with that in terms of break above, be bullish.
Yeah, I see this really this next couple of weeks because it's a bit of crucial now, especially with the interest rates, what's going on. We will see where the price it's going to lead to. Just before we start this session today, it was trading at 26,800 and it dropped within 1 hour and something to 20,000. So it's something a little bit, it has room more to the downside as per the technical perspective. And I will definitely be interested if the price is going to come and reaches this area of just above 25,000 per Bitcoin, if it's going to break or it's going to hold. But if it's going to break the case, we can see it might be reaching back to below 20,000, and that's where I'm aiming to. That's what I'm expecting to see. Yeah, that's my bias.
Fabulous. And I think as a final point, which leads us into Theo, is that the same with Bitcoin, same with gold, same with silver, and other commodities, etc., is that a lot of this is being driven by actually what's going on in the dollar. All right, which kind of leads us on. Which kind of leads us on nicely to Theo's section. So thank you for that, Jens. So if I just bring that up, well, there you go. There you go, Theo. The floor is yours. Fire away.
So starting from the dollar index, that's a weekly chart, and we see here. Let's find the arrow. Yep. Okay. So what I spotted here, it was towards the end of 2022, we see that a bullish crossover occurred on the moving averages. Actually, this is the 10-period moving average on the weekly, and this is the 40-period moving average on the weekly, which they make them the 50 and the 200 on the daily chart. So we are talking about the bullish crossover here, and all these impulse move, it helps us to point the beginning and the end. So we draw the fib and we find the golden ratio to be that black line at 61.8%, where we saw that price false break just 2.5 months ago, and then it spiked to the upside, creating a new market structure here. So what's I'm looking forward towards the next few months is at the least a rally up to the 100, just below 110, where there is a strong inside resistance here, as we can see on the chart. But what really interested me in this chart is the fact that it's been 2.5 months, almost 3 months, with no retracement, no correction. Interest rates rallies, dollar rally. Interest rate stays flat, dollar rallies. So I'm expecting to see some more push to the upside, to be honest. And yeah, even with some waves, some consolidations or some corrections in the price, still bullish on the dollar and expected to see the price rallies to 110. And then if you just allow me to answer a question that I saw on the chat about the gold. Someone commented on the gold prices, that they are not in a line. Lately, we see that commodities, they don't 100% move oppositely to the dollar, like those they priced on US dollars. And that's an interesting shift we see in the relation between commodities and the dollar, just to state it as simple as that with no further analysis. But yeah, that's what I see on this chart. Gentlemen?
That's been quite some run of the last 2.5 months. I think we're on course here for what could be, I think it's 11th straight bullish closes on a weekly chart, and I don't think that's ever occurred. Jens is probably a better stock market historian than me, but I don't think that's ever occurred. That is quite something significant. And it leads us into, because in terms of what I could have talked about, like dollar yen, okay, because we're back up towards 150 where they've intervened last time. This will break, it will break other currencies. It's the reflection of it, how it trades against other currencies. So it's you wouldn't want to be fighting dollar strength at the moment.
Yep. If Jens doesn't have any question or doesn't want to comment.
No, I just checked here on my screen. Euro USD is right now attacking 105. So this is well,
there you are.
It's a perfect illustration of what you. But I think it's I think a bounce. So I don't want to buy here anymore. So now everyone is watching this potentially, and this is, I think, a perfect example of what it looks like if we're a little too extended, let's say. So risk reward wise, I think you want to wait for a bounce. If the bounce does not occur, or this extended mode is reduced, let's say, over time, and there's no bounce, I think this underlines extremely the weakness of the counterpart. In this case, potentially the euro. So I could imagine that to probably see a drive lower now and no real bounce happening, and then we digest this, and then we see another like lower down to parity potentially in Euro USD.
Yep, parity would be fine. Yeah. Okay, cool. That's a really good, Theo. If we go on to your next one, Neo.
Neo Inc., one of my favorites, based purely on the market analysis. Now, what I spotted here, and I would like to briefly go back to the past, is just towards the end of 2021, we see the price moving upward, okay, on a heavy volume, somewhere around the $55 per share. Everything looks bullish, everything looks healthy. I will explain what this OBV is and what the RS down here is. And then suddenly we see a few months later an all-time high, $67 per share, but on extreme light volume that lacks momentum. We see the on-balance volume. It's an indicator that shows money flows in and out of the stock, and it has a slope to the downside. Also, the volume that shows how many shares traded as per week, they show that it was a significantly lower amount of shares, and the relative strength shows that that's, by the way, this is the S&P 500 index, and it shows that this security, this Neo Inc., underperformed its index. So But focusing on these three parameters, we can understand that the expectancy was to see some correction of the price. It's like it was overestimated, and now it's time to correct. And within 3 months, 4 months, it loses more than 50% of its value, dropping to the $30, then moving below to below the 50 period moving average. Then we had a bearish crossover just towards the end of 2022. And in 2023, we saw the price stays a little bit flat. And now we are trading around $8. Now, there is a bearish bias in this one. If you see the volume last week, particularly here, it was an increased amount of volume in a bearish move, and that's really, really bearish. All right, so what I do expect here is the price to continue moving lower based on these indications. We have a negative on balance volume, not negative in terms of minus on the price, but compared to the previous swing, we see that the money flows more out of the security. So there is a tendency for the price to continue in its predominant direction and retest the level of $7 if it's continue lower. That's the S1. And if it's going to break and move even lower, I can see this coming somewhere around the $4 at the S2. That's taken from the past data. Now, in case price finds some support at the $7 and it bounces upward, there is a good reward to risk to be made, in my opinion, because the next resistance level found to be around the $16, and that's the previous swing high here. So that's what I see in terms of this one, Neil. Your thoughts?
I'd go for the short side. So as a potential Tesla competitor, I think NIO is. And in fact, I think the developments also in the EV space in China. I think there are clear signs that their overall profitability drops significantly. That's not just true for NIO, but also for Li and XPeng. So especially with the aggressive price cuts from Tesla in China, I think I'm not really seeing someone aggressively buying to let the stock bounce from here. That's probably that way, and that way I think you should be really, really careful once you consider investments in this space. If NIO is such an attractive candidate longer term with such an increase in volume and the drop lower, I think that's a clear sign. I think the price tells that this is potentially not heading higher, but potentially headed lower and following the trend which has already established.
Yeah, I'd have the same view. Bearish. I would be expecting a flush to flush those lows before any opinion or view on being bullish. So I think it's definitely that's just bearish all the way. Excellent. All right, now, well, let's move on to your final, which kind of is a link into a little bit what you talked about in terms of dollar index.
Yes. Now, this one, it's very interesting. Now, it was the moment, especially here, because the time presses a little bit. I would like to comment on this particular, but I'm going to focus on this area here. It was somewhere July, August, when the Reserve Bank of Australia, for first time, they flattened the rates. They didn't hike, they didn't increase the rates, and they stay flat at 4.1, I think, something, 4.1%, yeah?
Yep.
And that was actually, what we say all the time is on every trade, on every market, either we're going to learn something for the market behavior, or we're going to learn something about ourselves. And in this particular moment, it was the time that the technical and the fundamentals, they were in a line. Rarely to see this in the market, especially in the Forex market. But here we had a leading economic indicator, which is the interest rates, with the fundamental bearish within these lower highs and lower low sequence. Now, if someone observed the market here, clearly could see that after price tapped into this area of support, it didn't bounce aggressively to the upside like it did in the most recent past. So that was a clear signal that, hey, maybe this is subjective for a break towards the downside. Then the interest rates kicked in. It was somewhere here. It was that bearish pin bar, and it confirmed that the market, it's not susceptible to a bullish bias here. And something I see traders, and okay, that's a good, I think a good comment for our audience. Sorry, a good observation for our audience. When people, they see the RSI, this is the RSI indicator, they see the RSI oversold, they have, it's below 30, they have the tendency to look for ways to buy it. But an oversold indicator, it means there is a strong bearish bias. It doesn't necessarily mean buy it, it's just say, hey, wait for correction in the price. It doesn't say go long because it's oversold. A market that is in a strong trend, always it drives any indicator, either it's other side or RSI or stochastic or commodity channel index, MACD, everything, it's going to be in a downtrend, a strong downtrend, it's going to be oversold. So we didn't want to buy, because we are also retail traders, we didn't want to aggressively sell the support. We had to wait for something to confirm a solid, that this breakout maybe occurred, and maybe we could reduce our trading size at this particular one because we had to take a trade at support. So that was what got me excited to trade it to the downside, and I could utilize this on the lower time frames, actually on the 1 hour chart. Then currently we see the market is flattening here. We are trading between this tiny consolidation area. There are no clear swings with a good reward to risk. There are clear swings here, but not reward to risk favorable. It's not even 2-to-1. So we may see some bullishness on the RSI, but it doesn't mean we have to buy it. That one, in my opinion, I see it more as, yeah, every time the price comes here, it bounces to the upside. There is a tiny consolidation. It means that the market is not ready to break out, but RSI steers below 50, and that's bearish, and that's what I will be focusing on to see a break, and then to try and capitalize on the move until the next area of support. So I see it more bearish than bullish, this market. Yep.
I think this is also given that the Aussie is a commodity currency, I would say, and also an indicator for the overall probably economic outlook. And given the especially developments and the strong trade relations with China and the problems we are facing right now in China, I think fundamentally speaking, I'd also say that the Aussie, I don't really want to be long, especially against the US dollar, which is currently just crushing it, let's say.
Yep. Paul?
Yeah, no, I've been watching this and I've been interested in it as well because, as you can see there, it's clearly consolidated for about the last month at a time where we've just looked at that dollar index and what Jens said. The dollar's crushing it against sterling, against euro, against Swiss franc, etc. But against Aussie and Kiwi, if you look at them, they have been going sideways at a time when we've had real dollar strength, and you have to wonder: is that a reflection of people's optimism about China? Because 6 months ago, people were not terribly optimistic about China, and invariably that had a knock-on effect because the Aussie is just a proxy for it. So I'm curious now to see why are we, at a time when the dollar's crushing everything, it hasn't been in terms of the Aussie and the Kiwi. So it's getting to a point where it's going to make a decision. Your natural inclination would be to continue bearish, but yeah, I'm curious to see how that is that basing of some sort at the moment. So it's going to have to make a decision. So yeah, good choice there. So So yeah, so I think that's all of us in it, and I apologize that we overran a little bit. As I did say at the start, once you get traders talking about charts, all right, okay, we can just talk for hours and hours and hours. Okay, so I apologize for that. I am happy to stay on for a little bit if there are any particular questions or comments or thoughts that you have got in there, and if there is we can do that. I think there might be one or two in the chat box there we can look at just to finish off. Yeah,
Sure.
Conclusions, just are that it's been an eventful year so far. It promises to be an eventful final few months, and as always, I think hopefully what we can get across is that these things are either a threat or an opportunity. However, for it to be an opportunity, you need to be educated and prepared. Hence why you should attend these Admirals webinars to help you in terms of managing that. So we'll keep it that. So Theo, are there any particular questions that
There are
there
few
or
questions.
that
I'm gonna guys, apologies. There are questions, but due to the time, we are lacking a bit of time. Couple of minutes. I'm gonna let Paul and Jens to answer. Try to be very short on the answer so we can end the webinar with all the respect. Okay. So first question. Darshan, that was a good statement about the gold. Let's move on. Question: Didn't China just become the largest exporter of EVs?
That'd be one for Jens.
Yeah,
I don't know. Did they? So is there any source? I don't know. It could be, certainly could be. I think BYD is probably also in this space. But I don't have any numbers.
Okay.
I have to look up myself.
All right, and the last one. Thoughts on uranium? Just very briefly, if you have any thoughts. If you don't have anything to comment, absolutely fine.
On uranium, yeah, at the moment I wouldn't have anything particular of interest myself. I don't think I could make a really good comment on uranium, right here.
Just on, but when we see the technical chart, we analyze it as a as it is, and just to work it out the normal way. I mean, that's all what I can say. I promise I wouldn't say anything, but I just say something. That's okay.
Me too. In fact, so no thoughts. So I've watched this at the end of 2022, if I'm not mistaken, due to developments, especially in Germany, and then saying, well, you can't be serious to shut down what's the word for this?
The nuclear power plants.
Yeah, exactly. And well, they were serious. On the other hand, there's many countries around the globe investing in this space right now. But right now, at least, I think we didn't go vertical, let's say. So I'm not even sure if I don't even really have a chart on my radar right now. So no real thoughts on this since it didn't materialize the way it played out, or as it should have played out over the course of the last 12 months.
Awesome.
So I just to kind of finish us off, isn't it, Theo? So if
yes,
thanks very much for everybody joining us. I hope you found that useful. It's given you a bit of insight. It's given you some things you could take away and have a look at yourselves. If you've got any comments or thoughts, well, of course, there's a whole range that you can look at it. I'll tell you what I'll do is tomorrow I'll have a look at the chart on uranium, and if I can, I'll try and post probably a chart on either my own on one of the Admirals platforms. Okay, maybe I'll just put it in there as stuff that people can have a look at if there's that. But there'll be any feedback or any comments. Okay, if you've enjoyed this session, if you'd like to see more of them, please by all means let us know. At the end of this session, you should get a feedback form sent to you. We'd really appreciate just take a few moments, okay, just to basically give us some feedback. Okay, if you found it useful, we'll do more of them. If if it's not helped you, then then I'm sorry. But it has been a great conversation. Okay, I hope there's been some really interesting comments put there by my colleagues Jens and Theo. So just for myself, thank you very much, Jens, Theo. Any final comments?
Happy trading.
Totally.
Watch your
totally
stuff.
Cover everything. Yeah. Happy trading. Exactly.
Fabulous, fabulous. All right. Well, thank you, everybody. All right. Thank you, everybody, for joining us today. Look forward to speaking to you soon. Enjoy the rest of your trading week and the trading month and the trading quarter. And we will speak to you soon. Thanks very much, everybody. Cheers.
Thank you so much. Bye, everyone.
Bye bye.